welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 25th, 2025, and we're diving into SLB's first quarter earnings report for 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. SLB, a global technology leader in the energy sector, has just released its Q1 2025 earnings report, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. SLB reported a revenue of $8.49 billion for the first quarter, which is a 3% decrease year on year. John, can you elaborate on this?
Absolutely. The revenue decline is primarily due to reduced activity in key regions like Mexico and Saudi Arabia. However, it's important to note that despite the revenue dip, SLB managed to maintain a strong adjusted EPS of 72 cents, which is slightly below the forecasted 74 cents by analysts.
And what about profitability?
Net income attributable to SLB was $797 million, a 25% decrease year on year. However, cash flow from operations increased significantly by $333 million to $660 million, showcasing strong operational cash generation.
Geographical and segment performance. How did SLB perform across different geographies and segments?
International revenue was $6.73 billion, down 5% year on year, mainly due to declines in Latin America and Europe and Africa. North America, however, saw an 8% increase in revenue, driven by digital sales and subsea production systems.
And in terms of segments,
The digital and integration segment grew by 6% year on year, thanks to a 17% increase in digital revenue. Production systems also saw a 4% growth, driven by strong demand for surface production systems and artificial lift.
operational efficiencies, and future outlook. SLB's adjusted EBITDA was $2.2 billion with a margin of 23.8%. How is the company managing its operational efficiencies?
SLB has been focusing on cost reduction initiatives and aligning resources with activity levels. This has helped them maintain a stable adjusted EBITDA margin despite market challenges.
What can we expect from SLB moving forward?
SLB is committed to returning a minimum of $4 billion to shareholders in 2025 through dividends and share repurchases. They are also expanding their digital offerings and diversifying beyond oil and gas, which should support future growth.
CEO insights and strategic initiatives. What insights did CEO Olivier Peuch provide in the earnings report?
Olivier Peuch highlighted the resilience of SLB in changing market conditions. He emphasized the growth in digital revenue, which increased by 17% year on year, and the ongoing strategic initiatives in new energy sectors.
Any notable strategic moves?
Yes, SLB recently acquired Interactive Network Technologies to enhance their digital platform capabilities. This acquisition aligns with their strategy to expand digital and AI solutions, which are increasingly decoupled from traditional upstream cycle dynamics.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 74 cents for SLB, but the actual adjusted EPS came in at 72 cents. How should investors interpret this?
While the adjusted EPS of 72 cents is slightly below the forecast, it's important to consider the broader context. The 4% year-on-year decrease in EPS reflects the challenging market conditions, but SLB's strategic initiatives and cost management are mitigating the impact.
So should investors be concerned?
Not necessarily. The slight miss on EPS is offset by strong cash flow and strategic growth initiatives. Investors should focus on SLB's long-term potential and their commitment to shareholder returns.
Key takeaways. In summary, SLB's Q1 2025 performance reflects resilience in a challenging market. With revenue at $8.49 billion and an adjusted EPS of 72 cents, the company is navigating well through market dynamics. Their strong cash flow and commitment to returning $4 billion to shareholders are positive indicators for investors.
Indeed, SLB's strategic focus on digital growth and operational efficiencies positions them well for future success. Investors should keep an eye on their ongoing initiatives and market developments.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on SLB's performance in the comments below.